Well, the markets, I guess, are in wait-and-see mode, awaiting remarks from U.S. Fed Chair Jerome Powell later this week, the U.S. inflation report in June later this week on Thursday, and the start of corporate earnings in the United States as well. For a look at some of his top trade ideas, we're joined now by J.J. Kinahan, Chief Executive Officer of IG North America. J.J., always great to have you with us. One thing you're watching is volatility. As it's been subdued recently, but you would not be surprised to see a pickup in volatility. Explain.
Yeah, it should probably be lack of volatility rather than volatility, right, John? I mean, it's been crazy how low it's been, and to your point, the three things you just talked about being the CPI, Chairman Powell testifying this week, and, the start of earnings, you would certainly think that one of those would be a catalyst to perhaps help volatility come back. So it's really interesting to me how in stride the market is taking everything and taking these three, what all could be major news events on their own as we go into the week. So I think that's really been the theme of the last couple of months that has a lot of us scratching our heads a little bit as no matter what seems to be thrown at this market, it just kind of doesn't blink, if you will, plays it off. And, VIX, which is normally, obviously the greatest measure of volatility and usually up around 18 or so, has just held in this 12 and 13 level for the longest time as the market just continues to seem unflappable to any worries.
On Thursday, we get those inflation numbers in the U.S. What the market is expecting is an annualized pace of inflation in June of 3.1%. That would be down substantially from May's pace of 3.3%. What do you think? How will the market react, do you think, JJ, if we get that number, or indeed if we get something more modest, like 3.0 or 2.9?
Well, after last week's employment report, you saw the probabilities of a rate hike go to just over 80% immediately after. I think for those who, a rate cut. I apologize. I said a rate hike. For those who are really wanting a rate cut desperately, it's one more arrow in their quiver, if you will, to make that case that if the inflation pressure isn't as high as it once was, that there's no reason to be raising rates and in fact, quite the opposite, that perhaps we should be cutting rates to continue to stimulate the economy as we go forward. So I think that that's really the biggest thing people are looking for here is, will there be more evidence that perhaps we should go to an easier, if you will, money policy?
Speaking of which, Jerome Powell, the chair of the U.S. Fed, begins 2 days of congressional testimony tomorrow. So he'll speak on Tuesday and Wednesday. He will speak very deliberately, carefully, and purposefully. But what kind of message do you think he wants to deliver to Capitol Hill?
Yeah, as you and I probably remember, this one old, it was called the Humphrey Hawkins Act, and the chairman has to go up to Congress every quarter. And to your point, I think he's going to be very, very guarded in what he says, particularly his statement. The Q&A is usually the more interesting part of this, as the members of Congress get to quiz him on different aspects of the economy. I think the things you really want to pay attention to there are going to be employment. Obviously, I don't think he'll specifically say anything they're going to do with rate hikes or lack thereof, but what they see for the economy going out on time, what they see for growth, and of course we'll get real-time information on that starting Thursday morning when you have Pepsi and Delta kicking off some of the earnings season, followed by the financials on Friday. And so I think that that's really where they're going to focus a lot of their questioning is, what those rate cuts look like. Is there a reason to stay at this level, particularly if the employment picture, we've seen some big revisions the last two reports. And so I think that may be something, too, that Congress is asking about. What is, again, many of them going to be coming up for re-election. What's the one thing they always want to make sure is that the people in their districts have jobs. And so that's going to be, I think, a major point of questioning for the chairman.
Let's go to earnings season. It begins on Thursday with PepsiCo and another company, Delta Airlines, and then kicks into high gear with three of the giants of the banking industry, JP Morgan Chase, Citi, and Wells Fargo reporting. According to FactSet, earnings growth is expected to come in for the S&P 500 at large at about 9%. Is that enough to keep stocks moving higher? Is that enough to satisfy current valuations?
Well, I think it is actually, and I think to say an average is one thing. I think what you actually want to see is the earnings growth continue to come in sort of the bigger names. What do I mean by that? Those stocks you're referring to on Friday, the financials. Again, the number 2 sector in the S&P 500 really sets the tone for the earnings season. You want to see it there, and then of course in the big tech stocks that you're talking about every single day, the Nvidias, the Apples, etc. Of the world. If you get it from those 2 sectors, I think that this sets up for a pretty successful earnings season overall, because again, those are the stocks that we're riding, if you will, as we go higher. So it'll be very interesting to see if we can achieve that. Again, when you're getting that, we're already trading above the average PE in the S&P 500. So to continue to get earnings growth, I think is really important. If you get that 8.5%, 9% level, I think it continues to support a higher market overall. And at this point, it's just been, as we talked about earlier, so resilient. I don't think any of us thought we'd be talking about these levels earlier in the year, and the market just doesn't stop. When you have a stock like Meta up almost 50% on the year, it's absolutely amazing.
JJ.